Hi, this is Dan Whitney with the Whitney Law Firm in Towson, Maryland. Today we're going to talk about the issue of what is dealer reserve kickback, also commonly known as dealer participation, or also just simply holding points. So my name's Dan Whitney. I'm an attorney. I've been practicing law for over 10 years, and a lot of what I do is suing car dealerships and finance companies for the many infinite ways that they end up cheating consumers at the end of the day. So one of the biggest ways that many people have no idea is actually happening, that they're getting cheated by, is something called dealer reserve or dealer participation. So here's what it is. When a customer goes into a car dealership, very often the customer relies on the finance manager to help them get credit from the lender to buy the car. And the way it usually happens is, as long as your credit is halfway decent and you have some income, you'll be able to find a lender. They will lend to almost anybody these days. And what happens is you fill out a credit application, it gets submitted through DealerTrack or Route 1, which sends it out to all the different participating banks. And the banks will come back and send what's called a decision details or a contract details sheet, and that'll be transmitted to the finance person. And what happens is, on that sheet, there's usually, among other numbers, there's two numbers. One is the buy rate, one is the participation rate. For the purpose of this example, let's say that the buy rate is 10%, and let's say the participation rate is 12%. The question is, what does it mean? This is what it means. The buy rate is the lowest rate that the lender is willing to finance the purchase at. The participation rate is the highest rate that the lender is willing to let the finance manager or let the dealer finance the deal at. You might ask yourself, well, two points difference on an interest rate is significant. You might be looking at $40 or $50 a month, depending on your term, added to your contract for what? That's the question. For what? Well, here's what it is. That extra 2 points is of absolutely no benefit or use to you as a consumer. What it is simply pure, added, arguably, most likely, illegal profit to the dealership and the finance company, who usually split that holdback amount or reserve amount. And so what happens is the finance manager will say to the customer, great news, I've been able to get you approved at 12% through Bank X, and we're ready to rock. And the customer might say, okay, thank you. They might say, can you do any better? They might say, well, my credit union can get me 11%. Any sort of negotiations may happen. But what very often happens is the finance manager will say, I've got you done at 12%. That's the best we can do. And the customer usually says yes. Now, in these situations, what the finance manager is not disclosing, which is in legal terms called a material fact, simply meaning something important. And in Maryland, a material fact is defined as something that a consumer, an unsophisticated consumer, would find important to consider and know before deciding whether or not to go down the path of entering into the contract. So, of course, if somebody's being charged more interest than they have to be in order to obtain a loan, that's an easy one. That's certainly a material fact. So what these finance managers do is they just say you're approved at 12. They will not disclose that you are approved at the lower buy rate, and instead they stay silent on that. And under the various states' consumer protection acts, that is a deceptive practice by failing to disclose what the true rate is, and by failing to disclose to the consumer that because I'm charging you a higher rate, guess what? For the next 36, 48, 60, maybe 84 months, you're now going to be paying $40 or $50 more a month for absolutely nothing as far as a benefit to you. And instead, so myself, my dealer, and the bank, we can split that 2 points up between us without anybody ever knowing, and we're all going to make more money off your back at your detriment. But don't worry, because you're never going to know. Now, I recently filed a lawsuit against a car dealership here in Maryland that involved claims of the dealer reserve amount not being disclosed. And so you might ask yourself, okay, how do I find out if this has happened to me? Now, can be a little bit tricky, because if you just call your bank and say, hey, I got a car loan and I was charged 8% and I want to know what was the lowest rate I could have got financed, the bank is going to say, customer, we're only the bank. That's between you and the dealer, which is their standard stock response when they don't want to share with you anything, because all they really want is your money. They don't care about anything else. So the way it came about in the case that I currently have, and in which I just brought this dealer reserve issue and pled it as a violation of Maryland's Consumer Protection Act for failing to disclose to my client, you're actually approved at 2 points less than what we were told you were approved at. So in this gentleman's case, he purchased what was supposed to be a new car, and when he got the vehicle, he opened the glove box a day or two later, finds a invoice for about $2,000 worth of repairs, and long story short, the dealer simply never disclosed to him that the car had required a rough pull and paint work and some body work because it had been significantly damaged before they sold it to him. And of course they didn't want to tell him because he wanted a new car, not a damaged car. But anyway, in the course of that case, what you do is you get the deal file as part of the discovery process. And in pretty much every deal file, there is a copy of the, it's called the decision details or the contract details that the dealership gets from the potential lender. And it'll say on this document what your buy rate is, what your participation rate is. So in a situation like this, you look at it and you realize, hey, not only did they cheat him as far as selling him a damaged car and failing to disclose that, which is its own violation of things, but also they weren't content with that. They ripped him off as to the interest rate as well. And so, of course, the question you have to ask yourself is, as a consumer, if you are sitting across from a finance manager and the finance manager says to you, you're approved at 16%, or whatever, would you consider it to be a material fact or an important fact to know that actually you were approved at 2 points or perhaps even 1 point less? The answer is of course you would, because you would say, well, listen, I want the lowest rate available to me that you could say I've earned based on my credit and my income, or at least what I'm eligible for. And why on earth would I let you make more money off my back than you're already making? No one would agree to it. And that's why they keep it a secret. And by doing so, it's my position and many other consumer attorneys that this is an absolutely illegal and deceptive practice that should not be allowed. So that's the discussion on dealer reserve, dealer participation, and holding points. I hope you found it helpful. If you have concerns about your own contract and you happen to be in Maryland, please call my office or go to our website, whitneyfirm.com, and consultations are always free. Thank you for watching. If you've enjoyed this or it's been helpful, please leave a thumbs up. Please subscribe. And if you have any questions about this, please leave it in the comments and I will respond if I can. Thank you so much and take care.